hate. You know what I'm saying? Just try to give me
Hi, Broderick. How are you?
doing great. How are you doing?
Very good. Thanks so much for joining us today.
Yes, ma'am. Yes, ma'am. Trying
What
to
you been
learn,
up to?
working, building. Uh,
Working hard?
yeah, yep. I
That's
was gonna call
yeah.
you earlier. I got tied up with some inspectors,
Uh-huh.
but I'm getting ready to build my house. So I wanted to get with you on mine
I'd
about.
love to help you.
Yep. So we want to get that started, at least get a pre approval going.
Very good. How
Yep.
long do you think it's gonna take you to build it?
Uh, I'm gonna push hard. So hopefully I'm gonna say 8 months. I mean,
Okay.
7 to 8 months if everything, my inspections go right.
Sounds good.
Yep. So
Hello, Phaedra. How are you?
I am doing well. How are you?
Doing good. Can't complain. Hey, Miss Sheila. How you doing, sweetie?
Hey, I'm doing good.
Good to see you again.
Yeah.
Yes, ma'am. Thank y'all so much for being on today. And y'all know I don't like to belabor the time, so we like to try to get started. We like to try to get started on time. So, for those of you who are here on time, I'd like to welcome you to our mortgage fitness class. We do this every other month for people who own homes and for people who look to attain home ownership in their future. What I've been finding is I've been getting a lot of phone calls from people about their payment, changes in their insurance and taxes. And so you may do the necessary steps to become a homeowner, but there's things down the line that you need to be aware of so that you remain a successful homeowner and you're able to prepare for any changes that come before you. Hi, Miss Talina, how are you doing?
I'm okay. How are you?
I'm doing good. Can everybody see my screen okay?
I can see it. Yes.
Okay, so I'd like to have Miss Sheila and Mr. Broderick. This is y'all's first time on, so definitely if you have questions, comments, just put them in the chat or feel free to just come off mute and share your experience. Or if you have a tip that you'd like to share, feel free to share it. I only have a few slides for you today, so it's not going to take very long, but I hope that you're able to just take a nugget or two with you to share with other customers, with other friends and family, other people that need to be educated on home ownership. So, understanding your mortgage payment and building wealth through home ownership. So, just about everybody on here is already a homeowner or has built homes for people. We actually have a builder on, which is awesome. And then we have realtor Miss Talina. Miss Phaedra will be back on, but she's a realtor as well. Miss Sheila is one of our first time home buyers, so we're super excited. I'm going to direct this question at you, Miss Sheila. You ready? Okay.
Yes,
So,
ma'am.
why do you think home ownership helps you to build wealth?
Uh, ooh, it's a life. I mean, I would say 30-year mortgage. It helps you because you can get a home that later appreciates. My sister was telling me this morning around 6 in the morning. Her home was a foreclosure. It was 90,000, and now she gets offers in the mail offering her over 300,000 for her home.
Wow. So if she paid 90,000 for it and it's now worth 300,000, how much equity does she have roughly?
I'm not even sure.
Yeah. So if you take that price of 90,000 and what it's worth now, about 300,000. So she has roughly $200,000 of equity. So when did your sister purchase her home? Roughly what year?
She her 2008, or it was I think it was 2008. Yes, ma'am.
2008. So, in the event something happened in her life or in her family's life, she has about 200,000, actually probably more because now she doesn't owe 90,000. So, her home may even be paid off. So, if her home is paid off, she has $300,000 that is her net worth. So that is what wealth is. Wealth is your net worth. So it's monies or investments, things of that sort that you can access if you were to need them for later on down the road to take care of yourself or maybe put your children through college. So thank you so much for participating. I love it. Anybody else want to share what they feel building wealth is to them when it comes to home ownership?
Well, I was going to piggyback and tell Miss Sheila, you may want to tell your sister to call Miss Tamika and let Miss Tamika tell about the Equity Express loan, which I utilize to purchase me an investment property. So, yeah.
Oh,
I
good.
definitely will.
So good. That's exactly right. So Miss Phaedra basically is sharing with you that you can extend that wealth and create, investment homes and things of that sort by utilizing a portion of what you have in equity to buy another property and maybe create more investment opportunities and just build your portfolio. So thank you so much, Miss Phaedra.
Oh, I want to say one more thing. Hey, Treva. I saw
Is
her
Trina
online today.
on?
Yeah.
I can't see everybody, so y'all please forgive me. Maybe like in a year or so
Hey.
after all this technology. Hey, Treva. All right, sweetie. So the next slide here says understanding your mortgage payment is key to success, is key to financial success because it directly affects your budget, long-term planning, and financial stability. One of the things that we ask our clients to do when they're looking at purchasing a home is to actually sit down with their partner or anyone else that's in their home and do their budget. Anybody have a budget on the call? Do we have any hands in the air? Wave them like you really do care. So, Miss Talina, you have a budget? I don't see anyone else. I'm sorry. So,
Well,
Sheila,
I do, but I
you
can't.
do? Okay, great. So, what does a budget do for you?
For me,
Helps
it
me
keeps
with
me focused.
pre-planning.
Keeps you focused. And Miss Sheila, what'd you say?
Planning.
Planning.
uh,
Yes,
Structure.
I think it helps with your now and your future as far as setting goals as well.
Very good.
Hmm. That's realistic and achievable.
Hmm. Wow, so good. So when I said budget to myself, because one of the things I don't do is rehearse these things, but when I said budget to myself, what I thought about was the word boundaries. I thought about that word. So structure goes along with that, but it kind of gives you boundaries. Like this is how much I set aside for groceries. So I want to stay within these boundaries or within this structure. So sometimes it can be a little challenging. Maybe you have a longer month, or maybe you have a shorter month. So maybe you don't always get the same number of paychecks. So you all do have to be very careful about the income that you're hoping to get and then breaking that down into the things that's important to you. So, what's the first thing that you have on your budget sheet? Like, what's the top thing that you pay every month? What's the most important?
The mortgage.
The mortgage. Your mortgage or your housing. So important. So many of us don't have our priorities in line, right? So we want to have a car, we want to have all the things, but we don't have our priorities in line. So our housing is so important, whether it's rent or whether it's mortgage, and paying those things in a timely fashion. So important. We run into people sometimes with issues with past landlords or past rental situations and they have a collection or a charge off on their credit. And that's one of the things that's important to fix because you're going into buying a home. So if you have past issues with landlords and rental, you definitely want to resolve that because we're now looking for someone to lend us money for the same line item, housing. So definitely keep that in mind, whether or not it's your fault or not, because a lot of times we're done wrong when we're renting. But breaking down your mortgage payment. So I'm gonna give y'all a cheat sheet here. You all can see the different items that are attached to your total mortgage payment. So the first one is your principal. Anybody know what principal is? So it gives you a
It's
definition here. Principal is the amount borrowed and how it reduces over time. So that's something that we're paying down over time. So if you have a 30-year loan, a lot of times you'll get your monthly statement and you'll see your principal slowly going down. Like those first few years, it's like, is anything going on my principal? Like, is anything going on my principal? So when you have a home loan, you're paying interest on that loan, right? So a significant part of your payment does go toward interest. But guess what happens? The longer you keep that home, the more your principal goes down. So the very same payment you've been paying starts to attack more and more of that principal because your interest is only on what's remaining. So let's take Miss Sheila's family member. We'll just use her for this example. She purchased a home at $90,000 in 2008. So let's say today she owes only 10,000, where her rate of interest she had at 90,000 now is only applied on 10,000. So it's a smaller amount that's being charged to her now on interest. So of her principal. So if you think about that, every month that you apply money to your principal, when they calculate the interest, that number also reduces. So that's why in the latter years of you owning your home, your principal starts to come down with bigger chunks, okay? Anybody have any questions around principal and interest or what those things are and what they mean? Those are the two parts of your payment that'll never change. So your principal, your interest, those two things will never change. So another part of your monthly mortgage payment are your property taxes and your home insurance. So your property taxes, if you buy a home that's already established, it's going to go by what the property taxes show on the county record for that year. If you buy a home that's brand new, they're going to estimate your property tax. So it may not be exactly what it's going to be assessed at. We're going to estimate what your property tax will be. So every year that they assess taxes or they change tax rates, your property tax can also change. I think everyone on here may be in Arkansas, and I believe y'all's property taxes are due at the end of March every year. And then here in Texas, our taxes are due at the end of December or January timeframe. So those are the times that the mortgage company is going to pay the tax bill for you. Now, if your property tax or insurance goes up, what's going to happen to your mortgage payment? It's
It's
going to
gonna
go
go up.
Oh, no,
going to go
yeah.
up. It is going to go up. So let me explain to you a little bit about your home insurance. Your home insurance, it is established when you buy your home. So it follows your month of closing, whereas taxes follow what the county establishes. So I want y'all to understand that the county establishes the deadline for your taxes. It's the same for everybody in the county. The insurance follows your close date. So if I have a client who closes today in June, her insurance will update every June. So the mortgage company is going to pay her insurance bill every June or at the end of May for June. Your home insurance is paid in advance. So if your home insurance carrier sends you a notice in April for June, your home insurance carrier is going to send you a notice by mail, by email. If they don't do mail anymore, people are charging for mail now. So keep an eye on your email. They'll send you a notice and they'll say, hey, Miss Sheila, I hope you enjoyed your first year of home ownership. Everything was great. Well, hey, don't you worry about your home insurance. Your mortgage company is going to pay it for you, and here's your new premium. So when you get that notice a couple of months out before the renewal, you want to pay attention to that actual notice because that notice is going to determine if your payment is going to adjust or not. So the mortgage company is going to get that same little reminder from your insurance company and it's going to say, hey, here is Miss Sheila's new bill for her insurance. The mortgage company is going to pay it. They're not going to call them. They're not going to say, why'd you go up? That's not their job. So we have to be accountable for those notices when we get them as homeowners. I'm guilty myself. That's why I'm having this class. I'm guilty myself. So my own insurance company no longer sends mail. They charge $2 more to send the statement by mail. So you need a reminder on your phone that says you closed on June 2025 in April. You need to start looking for that notice so that you can contact that insurance carrier and say, hey, looks like you went up $600 on me. What happened? Oh, it's some storms and some this and some that. Okay, well, what can you do to get me back down to like really close to what I was at? So you can start working on it. Don't let the mortgage company pay it and then you wait and you wait and you wait because the mortgage company is going to come back for that difference. So the purpose of this is just to express to you all how important it is to keep up with those notices, especially in the times we're in with these storms. Miss Phaedra, you want to share?
I think you said it when you talked about the difference. I was just gonna say if they increase it and they don't have enough funds in your escrow to cover it, then they will come back and charge you for the difference by adding it to your mortgage payment until it's paid off. So you have the option to pay the rear amount in full or pay it out monthly.
Exactly. So I'm sure some of us have experienced that. I've experienced it a lot of times. I've also experienced it though in the other direction. So I've experienced it where it has gone down. So be aware of that too, especially if you purchase a brand new home, because sometimes your brand new home tax bill for the first year will be based on the dirt alone and no structure. And so the mortgage company will pay that dirt only tax bill and they'll adjust your payment down because they're not doing all the research on if the tax bill is with the house or not. They're not doing that, right? They're just doing accounting. Now, in your head, you said, now, Miss Tomekia told me my taxes was going to be X. So that's a good time for you to pick up the phone and call and say, hey, the mortgage company lowered my payment. What should I do? Well, remember you bought a new house, so let's just go ahead and send that money anyway into your escrow account. So that's why having a good team, people you can reach out to after the fact to help you throughout those times, it's so important because you're not going to know all the things, but we'll be there to help you. All right, so let's talk about your mortgage insurance premium and your HOA fees. So mortgage insurance premium is another thing. I'm going to say it's kind of fixed as well because it's not going to really change unless it comes off of your mortgage, unless you refinance, unless it just drops based on the value of your home going up if you have a conventional loan. So your mortgage insurance premium is also something that's for the most part fixed. It's not going to change. The things that you need to focus on that are going to change are your property taxes and your home insurance. So just paying attention to those notices when they come out. Most of you all on the call, again, I believe, are Arkansas. So you don't have HOAs. Some of you have property owner association fees, I believe. And then if you buy a condo or some type of property where upkeep is done for you, you may have maintenance fees or condo fees. Has anyone on the call dealt with a condo transaction, either realtor or client? No one? So some people look into condos because they feel like they're, convenient. So they could be good for a more seasoned borrower or for like a single parent. It could be good for them. But your condo fee takes care of certain things like the landscaping, maybe the upkeep of the roof. So your condo association will share with you all the things that they take care of for you. But for the most part, it adds a significant amount to your monthly payment, 200 a month, 300 a month, but you have to also then, now you're not paying for lawn service and you're not paying for the flowers when they come out in the spring and the fertilizer. So you just have to weigh it out and see if that makes sense for you. Does anyone have questions on what mortgage insurance is? I'm going to share it with you just in case. So the first insurance over here on this side, where'd it go? Right here. This is your home insurance. So your home insurance is taking care of your property and your items in your property. It takes care of your shed, anything that's on the property itself and your belongings. So if there's a fire, if there's a tornado, any of those type of things. Some home insurance policy also takes care of you if someone comes on your property and is injured. So you have to look at what your policy entails and then go from there with your home insurance. But mortgage insurance actually protects the bank against your default or your chance or possibility of default. So in most cases, like 97% of people have some type of mortgage insurance on their loan because they are not putting down 20%. Like we have a 15% down program where you can avoid mortgage insurance, but for the general population, it's 20% down to avoid mortgage insurance. But again, if you were to default on your property and it foreclosed, mortgage insurance helps pay the bank back what they may have lost due to the value of the home or upkeep of the home when you leave the property. So when you have a foreclosure that happens, many times that bank is selling the home at a discounted price, and the mortgage insurance that the client had has helped to mitigate that difference there from what they lost in the loan and what they agreed to sell the property for at that discount price to get the property off the books. So that's what mortgage insurance does. Definitely stop me if y'all have any questions. All right, so long-term advantages of home ownership. We talked about equity building, and I am going to share with you all a case. So when we get done with this, I'm going to share a case and some numbers with you so you can just kind of see it. A lot of us have experienced it personally, so we know the value. It gives you stability versus renting, having fixed payments versus your rents possibly increasing. Tax advantages. So with home ownership, you have several tax advantages. And you also have the ability to leave the property and move out. I know one of our clients that's here on the call, you know, in her future, she plans to transition to another state. And so she'll have the flexibility to either sell her current house or lease it out, you know, so whichever one makes most sense to her and her spouse. And then here at the bottom, personalization. So with renting, you can't do all the things you want to do. I mean, they do have some creative stuff now. Do y'all watch TikTok? Maybe I'm by myself. But they have some really creative ways that you can decorate your house with, like peel and stick tile and all the things. But with your own property, you can paint it. You know, you can tear a wall down if you want to, change out fixtures, put up drapes, you know, invest in it to make it your own and make it comfortable. So, anyone want to share an advantage that they've experienced with home ownership?
Everything on the list.
Everything on the list?
Equity, stability, tax advantages, personalizing it to just doing whatever I want to do.
Yes, like changing your bedroom into another room. Like, hey,
Um, Sister, be quiet.
I want to share with y'all one again as a military spouse. We have really truly been blessed. We have owned a home our entire career and now after. But there was a period of time that we had to leave our home and we were trying to sell the home actually. So we still legally were homeowners. And my husband had to go away to school. And we stayed on base for this school. So we stayed in Leavenworth, Kansas. And we had a dog. And I had a new baby and a 6-year old and this dog. And I was like, I can't bring this dog in this duplex or whatever we was living in. It was like a townhome situation. Y'all know what I really liked about Kansas is the basement. They had a great basement. But back to the story is they had this light brown carpet. And I was like, I am not replacing these people's carpet. So, home ownership, you know, whether you have a pet, whether you have whatever is going on, whether you want to put a beauty shop in your house, like whatever, you can do whatever you want to do and not have to worry about owing somebody $5,000 for carpet when you move out. So, that's one thing that comes to mind for me. Another thing for me personally is I can dream and look at other properties. Like yesterday, I went to an open house and the home was gorgeous. It was in a great community, but I could sit there and dream about it and look at it, but I wasn't forced to do anything. If you're renting a property, you can be forced to have to move. If that owner wants their property back, they can give you a whole 2-day notice and be like, look, I'm selling my property, blah, blah, blah. Like a lot of times people don't even think about the fact that you've paid their mortgage for them for 20 years. You've been living in this house and now they want to give you notice to move out. So even though that home that I was at yesterday was basically the same price as my own home, so it's affordable, great location, all the things, but I didn't have to sweat trying to move. I didn't have to worry about that. If I really wanted to, I'd have the option to. So home ownership gives you options, you know, it really does. So if you do not own a home or you are connected to anybody that does own a home, I want you to get their information and get them to us or to your favorite person in the world that's a real estate professional and get them moving toward home ownership. Because if you don't, you're going to be to blame. All right, so strategies to pay your mortgage down faster. So here are some quick tips on how you can turn that 30-year loan into a 7-year, a 20-year, a 15-year loan. Has anyone on the call had experience with paying a little extra on their principal? And feel free to come off mute. Okay, we have one young lady who has. Okay. And okay, great. So when you pay extra toward your principal, is that something that you've consistently done, or have you done it some and then stopped a little bit? Have you like changed it with your budget or income? Anybody want to share?
I
We did.
consistently. Hmm.
Miss Selena, go ahead. I'm sorry.
We tried it and we were given a extra $100 a month.
Mm-hmm.
And we have to be careful with that because we were sending a check. No,
Mm-hmm.
no, I take that back. We're in the computer and you put toward principal only.
Right.
So they were not applying it to the principal. They had like a little account or whatever, a holding space that they
Mm,
were putting that $100 in, even though we said put it toward the principal.
okay.
So when we called, they said, you have to call every time you
Oh
put
no.
something toward the principal. So we were like, it says this is for the mortgage, this is to the principal only or whatever.
Yes,
But
ma'am.
they said that they will not put it toward the
Mm,
principal unless you call. So just for people that's thinking about doing that, I would suggest checking to make sure that it went to your principal
absolutely.
because they really don't want us to pay it off early. So they're not gonna just do it like we asked them to do it. But after that, we realized that we want to do at least the principal payment because I don't know if it was this particular company that didn't want to apply it,
Right.
but the $100 didn't seem like it was really getting us anything. So we decided, and that's why it's good to have this class because a lot of times people think if your mortgage is $2,000, they got to pay $2,000. But
Mm,
minus all that other interest is really not that expensive to pay your principal payment if
right.
you can.
In my case, I've just recently started, so I'm planning on keeping it up monthly because I'm wanting to go ahead and pay my house off because of other health issues that I'm needing to save
Mm,
money for. So I'm wanting to make sure that my house is paid for in order to have extra funds for those upcoming
mm.
burdens that will come about on the health
Great.
side.
Thank you so much for sharing. That's also good too. And a lot of people we work with and we help, they're, younger, but now that you're a homeowner and you've gotten to a different season in your life, you have other reasons that things may be important or not so important to you. And I try to listen to that when I'm working with my clients, like what's their situation and what's their overall financial health? Like what does that look like? But just like right now, let's say, and I don't have your name, sweet lady, but let's say you only owe 10 years on your mortgage. Let's just make that up hypothetically. But you never refinanced your home, and let's say your mortgage payment is $2,000. And then let's just say you're on a fixed income. Let's just say that. And then let's say the market was at a reasonable rate. Like right now, probably not a good idea to refinance, right? But let's just say that it was, and you said, Miss Tamika, I need to get my bills down as low as possible. Would it make sense to maybe refinance your house for 30 years again? Because now your payment's not 2,000, it's 700. So every shoe don't fit every person, is my point. The thing about home ownership is it gives you that flexibility to then re-strategize your finances so that your money lasts properly, whether it's monthly or whether it's some type of lump sum amount. So if you have a home, because a lot of people want to pay their home off before they pass. But my thought, like for my own personal family, is enjoy your life, have enough to live on, the house will take care of itself. It's real estate. It's gonna be of value. A realtor will be able to sell it, or someone will be able to rent it. So the most important things, especially if you're a single lady or once you get to where you're on retirement and things of that sort, is having a comfortable standard of living so you can afford your health care and things like that. So, but home ownership does that for you, because if you were renting and your rent was 2,000, you can go to them and say, I want to pay 750 now. So renting, it is home ownership outweighs renting any day, any day. But that's good that you're able to apply extra to your principal at this time. That's a blessing. Anybody else have a story that they would like to share?
Mine was just about a commercial truck. I was paying.
Mm. On a commercial truck, you said?
Yes,
Like an
ma'am.
18-wheeler?
Yes, ma'am. It was a commercial truck. I was paying extra
Yeah.
to try to get it paid off early.
Very good. Very good. And you're gonna measure those things against like the interest you're paying. So right now, if you have a higher interest rate debt, it's always good to advance the principal. But let's say you're in a mortgage from years ago and you have a 3% interest rate. It would be better for you to invest that money in your 401k or in the market versus applying a ton of extra towards your principal. So again, all of our situations are definitely different, but just know these are some ways that you can help get that principal down and have a shorter term than a 30-year mortgage. All right. So what a cool last slide. Is that awesome? Our marketing lady is amazing. Like that's a cool last slide. But
It is.
it is pretty cool. I want to share with you guys just I'm gonna do stop share and then I'm gonna pull up something else because I want to really like bring this home. And I want to bring it home for not just those of us on the call, but also for those of us who are trying to grow our business and how important it is for us to continue to seek new clients and helping more people. So here we go. All right. Can y'all see my screen?
Yes, ma'am.
All right. Okay, so here is our little sample here. This shows you a 9-year recap of a person who is renting versus a person who decided to purchase a home. So we're using a purchase price of 325. That's somewhere between being a newer buyer and a move-up buyer in today's dollars. So for most of the central Arkansas areas, you can be at around 325. So we're looking at a 9-year window here. This chart is showing you the net gain by actually purchasing a home. But I'm going to go down. I want you all to see this here. So if you are renting, this shows you the annual rental increase. So there's about a 4% rental increase in rental rates in Little Rock. If you are purchasing a property, you might have an interest rate. Let's say you're doing a FHA or conventional loan. Interest rates right now are about in the high sixes. All right, so this is kind of what we are going off of. If you look right here, this appreciation gain, this is what Ms. Sheila was telling us, how the value increases over time. So the average appreciation rate for homeowners is 3.12% in your area. And after 9 years, that $325,000 property would be worth $428,000. So the person who purchased the home would then have $100,000 in appreciation in 9 years. Okay. All right. I wanted to show you. Oh, where did my little edit go? This is the breakdown of the payment. So this is giving you year 1, year 5, and year 9. If you were buying a home versus renting a home. So if you look at your principal and interest or versus your renting, principal and interest, these are these two numbers here. And you're renting, let's say you're paying $2,400 to rent a property at that same 325. Will you realtors say that if you had a $325,000 home, 2,400 would be roughly the rent amount for it?
Possibly.
That sounds
Yeah.
about right for a $325,000 home. Okay. So we're looking at total cost to buy, including your maintenance, property tax, insurance, all of that is around $2,600. Renting around $2,400 because you're not going to have a lot of expenses. You're going to call your landlord for the maintenance update. So maybe you only have a renter's insurance policy that you have to cover. So you're going to spend $2,400 in housing versus $2,600 in housing. At year 5, if your rent is increasing by 4%, you're going to pay over $2,800 in rent, where your mortgage is still staying around the same because you're keeping proper upkeep on your insurance and your taxes. So you may have some changes in payment, but not a lot. In year 9, if you compare renting and buying, you are now spending $3,300 in rent, $2,600 to purchase a home. So, what did we leave on the table when we rented a home? What we left on the table is definitely going to be the appreciation amount. And then if
Oh
you think
yeah.
about long term, renting even on a monthly basis is going to outweigh your ability to own a home, even with small increases in your mortgage payment. So this is just to kind of give you all a glimpse at why homeownership is so important. When is the best time to buy a house? Does anybody know?
It's always a great time to buy a house.
It's always a great time to buy a house. Why is that?
Because of the flexibility, the fact that you're building wealth with real estate,
Hmm.
and all those wonderful things.
It
People
is.
get, future homeowners get distracted about the closing costs, but so I bought my house in 2002, in June of 2002 to be exact. So I forgot what day, but happy home anniversary to me for June home ownership month. And then I became a real estate agent in 2005. So
Yeah.
when I purchased my property, the interest rates that we have now were actually the going interest rate back
They
then.
sure
So
were.
we just got spoiled with the, 3%. But actually, when I bought my home, six, between 5, 6, that was kind of like the going interest rate at that time.
Hmm.
So yeah.
Yeah, you're right. Can you all see the amortization chart that I pulled up on the screen? Can y'all see that?
Mm-hmm.
It may be kind of small, but this just shows you, like, for instance, for Miss Sheila, this is showing you here how much you pay on a monthly basis and then how your principal balance changes. So year 1, year 2, year 3, year 4. So every year your principal balance is going down, and eventually you no longer have a payment. But someone who does not own a home, they are going to still have a payment because they're paying rent and they don't have anything to pass down to their family. So for those of you who are on here, what is keeping you from purchasing a home? If you would want to share one or two things that might be keeping you from purchasing a home, what would that be?
I would like to share our process. It took months because credit.
Mm-hmm. Yep. But what are you now? You ready to go?
Ready to go. I was thankful because your team took time to actually look at the credit. We had agents that hung up on us because they
Mm.
get to ask you how much you make. They get to saying, "Oh, well, it sounds like you're not ready. You can call us back when you're ready." You guys actually took time, interviewed with us, went over what we should do, how we can improve this credit, and I mean, it's been almost, I want to say, close to a year. It's been months, but yeah, that was the issue for us that was holding credit.
Yeah. Well, y'all are definitely some shining stars, and they got their pre-approval letter today, friends. So we can just
Congratulations.
Thank
celebrate
you.
with you,
I
Sheila.
cried. I really cried because, like I said, we had agents that hung up the phone. They was like, "Oh, you're not ready. You need to call us back when you're ready." Oh, it sounds like your credit bad. It
Yeah,
was, man. I didn't
And
think you could do that, but yes.
I'm glad you mentioned that because a lot of people don't understand that, this, okay, so being a real estate agent, yes, we make a commission, but for me, It's about building a relationship. And if someone is willing to put in the work and uh, do the work, I'm willing to ride it out with you. So when Tomekia and her team take the time, because in reality, when you fill out a mortgage application, that lender's job is to they look at your credit and determine if you're eligible to purchase a home. So the things that Tamika and her team does to sit on a Zoom call, go over your credit, and then even send you an email to give you an overview, that's really not a part of the process. So that's like an extra service that they provide because they care about their clients. And a lot of people don't understand that. Like it's really you fill out your application, and if you don't meet the criteria, there a loan officer is not required to do all the things that the hunt team does. So that's an added plus. And then I've always done it to my clients, and some people don't, understand that that's like
Mhm.
that's a luxury, extra luxury, and
It is.
a blessing to
It
have
is.
someone to take time because everybody, things happen in life and everybody's not ready right away. But when you connect with the right people, you get a you get a letter today to say you ready to go shop for home. So, I'm glad you shared that because it's a lot of people don't take the time, and I'm glad you realized that you connected with the right people to get you the results that you got. So congratulations.
Yeah,
Thank
so
you. And there, some of them was like, you need to go talk to a credit counselor and everything. Like, some of those do consultations, some of them charge. It took
Yeah.
a
You see, I
while for
always
us to really
tell
get to
people,
the hunt team, but I am so thankful.
amen.
yeah.
Mhm.
And
We're
it takes,
thankful for you.
long as you sometime, you just have to first be motivated about what you want to do once you decide. And then it may not happen overnight and you may fall off, but long as you stay focused on it and just keep going, you'll get it done.
Yeah,
So you should be proud of yourself for that. Even so, what it took a year is you stayed focused and you got it done. So you should be very proud of yourself about that.
amen.
Thank you.
Another
Anybody else
thing
want
I
to share?
like to add is the patient part of it.
Mhm.
Because when you're going through things like that, you need people on your team that's patient. And Tamika and her team are very patient, and they inform you on things and kind of motivate you at the same time. Patience, motivation. Tamika and I always say prayer. We really not supposed to say it, but really it takes all those things as well. So a lot of times people just are not your fit. You have to find the one that's going to have what you need and the patience and all that to go along with it. And having a lender that does that is the best thing you can have, because the lender is the one that gets you pre-qualified. Then you have to have a realtor that's on the same, their balance with the lender. So you can't have a patient lender and then somebody that's just trying to make a dollar. You got to have
Yes.
somebody that want you to get where you want to get to. So that's what I always appreciate about Tamika and her team.
Y'all
Yes,
are
ma'am.
so kind to me. Y'all really are. And Miss Sheila did come to us by way of a realtor, and her realtor has been so supportive and has been on every call. And so she definitely has the same heart that all of you that are on here, other realtors, and even Mr. Broderick, he's a builder. But having the right heart, for people is so important. And I pray about that too, just the proper alignment. But I'm also grateful that Miss Sheila is going to get to continue her experience and it end up being a joyful, positive experience so that she won't dread when she goes to buy her next house, the next time. She won't dread that because that's important for our industry to thrive, for us to create enjoyable, experiences, to educate people, to love them where they are. And just to treat everybody the same, that's so important, so important. So those of you who are on here who maybe were invited by a realtor or maybe are aligned with the realtor, I would ask you to share with them at least one person that you know of that is not a homeowner, that they could give them a courtesy call. And then again, with Mr. Broderick, he's a local builder there in Little Rock. So if you all have clients that need consultations to have a home built, we work with him with our one-time close department. So he's able to help those clients as well. So, check him out or reach out if you need some help from he and his lovely wife. Um, but yeah, I would advise you if someone invited you or someone's been working with you, the best way to repay them is to give them a referral and they can reach out and love on those people just the same. Does anyone else have any questions? I'd like to give just a few minutes since we have time extra. If anybody wants to shout out their business, I'd like to open the floor for that.
I don't know if she's able to talk, but my client Triva is on here and she does charcuterie boxes. So Triva, I can't remember the name of your business, but if you guys are in Little Rock, she does very nice work. Triva Murray.
Yes, and she's
Yes.
online. Oh, there
Oh,
Thank
you
she's
go.
you. I'm sorry. I'm doing 10 things and working, but my business is So Charming Boxes LLC. Thank you, Phaedra. Thank you,
You're
Tamika. You
welcome.
ladies are awesome.
You're welcome. But charcuterie boxes would make really nice VIP gifts. So if you have a
Hmm.
business or you have a loved one, maybe Father's Day even, those would make some sweet gifts. And she's there in your
She has
area.
a Facebook
I was
page.
just about to say that she has a Facebook page. If you go to it, she has even the picture of a little charcuterie martini glass. So, and she has her business right there. So you can look her up by her name, Trivia Murray, and you'll be able to find her. And she has all the pictures and everything you can see with what she does. They're really beautiful, Miss Murray.
Yeah.
Anybody else have a business they'd like to shout out?
Thank you.
Mr. Moore, if he's a builder in Arkansas, could you share your information with us?
We can send it out on the thank you. He might be busy too. He's
Okay.
he just shared that he's gonna start building his family's home. So that's kind of cool. Go ahead,
Oh,
sweetheart.
yes, ma'am. What would you like to know?
We'll just give you a moment to shout out your business if you would like to.
Oh, well, professional finish. I mean, we build um custom spec. I mean, we do it all. We pretty much do everything in-house from start to finish. We dig our own footings all the way to everything. So we normally move pretty quick. Uh, Price fairly good. Just everything.
You said it's called professional.
Yes, it's professional finish LLC.
Okay.
What's the best number anyone can reach you on in case anyone wants to give you a call?
501 837 6054.
And we
All
have him,
righty.
Larissa. He's in our one-time close database.
Okay.
Awesome. So excited for you guys.
Yeah.
So don't forget, you owe whoever invited you at least one referral. And let's just keep building this thing together. Miss Talina, I'm so happy to see you for so many reasons. You already know. And thank you for bringing a special guest. That means the world to me. So many things that we can impart on one another, so much wisdom, right? All of us have been down different roads, different paths. We have different journeys. So, but when we bring that thing together, like we can save someone else from bumping their head, we can advance the next generation. So it's so great to just see a lot of different generations even represented here, a lot of different walks of life. So I'm so grateful. Thank you always, Miss Phaedra. You're always supporting me. And Miss Powell, thank you, sweetheart, for being on. Did you want to share anything? She might be at work.
Hello, everyone.
Hello,
I
Hello.
sweet-
I had to join today. I came on a little late, but I'm glad I caught what I did. Thank you so much.
You're welcome. We're gonna save the presentation. We'll upload it to our YouTube page. So feel free to also share any recommendations of things you'd like to learn or any special guests you'd like to see, so that we can continue on just educating people around us. So thank you all so much. I'm going to let y'all go 10 minutes early.
All right. Everyone have a good day.
Day.
Bye, guys. Thank you for joining us. Have a great day, everyone.
Bye,
You
everybody.
too.
Thank you.
Bye-bye.